Have you ever wondered why price will skyrocket, fall back down, and then continue back up again? Well, the fair value gap explains this. It's an ICT concept which has gained a lot of attention recently. A lot of people have heard about it, but not everyone understands exactly what it is and how to find it. So, in this video, I'm going to be telling you what the fair value gap is, why it's caused, and how to find it. So, if you're excited to learn, hit the thumbs up button before we get started. And if you want to see more content like this, hit subscribe to Thinkmarkets now as well.
So ICT explains that the fair value gap is formed when the market was in an area of consolidation. It pushes out of that area with a long-bodied candle, and then the market often comes back down to the fair value gap before heading back again. Now, the reason why a lot of traders get tripped up, especially if they are new, is they might see the market moving up with a lot of force. They think, okay, it's time to buy. So they enter into a buy position, get stopped out on the move back down, and then get frustrated when the market does actually end up going up as they first thought. So the idea is if you wait to enter on the fair value gap, you'll get a better risk to reward ratio and you're less likely to get stopped out. The reason he says that these happen is because the market moves up with so much force in these long-bodied candles that they actually miss several price points along the way. And at these price points are lots of orders which haven't got triggered because it moved too quickly, it almost sped past them. So because the market is geared for efficiency, this area becomes like a magnet to the market. So the market wants to come back down, trigger as many orders as possible, and then it's going to go back up. Now, we don't know for sure whether this is true or not, but whether it's true or not, it's still a nice story to explain why the market moves the way it does, and it can help you to remember what the market often does, and that can be useful for your trading. So I'm going to show you how to draw this on. I'm going to take it off, and then we're going to show you how to draw it on. So you want to find the imbalance candle. The imbalance candle is the long-bodied candle which pushes out of the area of consolidation. So this one here pushes us out of this area of consolidation. It's the one that imbalances the area of consolidation. So if you imagine it sort of going a bit sideways, this one actually was moving a little bit upwards, but it's the one that really imbalances it. So it's the one where you can really see that it's chosen a direction. And this one has really chosen to go up. The fair value gap is the area between the highest point of the candle before and the lowest point of the candle after. So I'm going to go in really close so you can see, and then we're going to draw it on. So I use the rectangle tool, and you go from the highest point of the candle before to that point there. That's where the wick comes to, and the lowest point of the candle after. So you're using the wick, drag it across, and then you can see that the market does revisit this area. Sometimes the market will actually come down to the very bottom of the fair value gap, but other times it just comes into the area. So what traders will do is they will look for a possible buy position within this area. As you can see, the market has revisited it several times, and you've got several wicks here. If you want to be efficient, you can obviously use a limit order, but it really depends on how big the gap is and what point it gets to in it.
So now you understand what the fair value gap is. If you're thinking about incorporating it into your trading strategy, then make sure you practice on a simulator first. If you head over to the Traders Gym at Thinkmarkets, you can practice any strategy with virtual money so you understand its probability before going live. If you found this video helpful, make sure to give it a little thumbs up. And if you want to see more content like this, hit subscribe to Thinkmarkets now as well.